Holding strong, it's a solid 200 points comeback that you're seeing right now, about 1.5% higher, and a solid market breadth as well. 146 stocks standing to the gainers right now. Metals, they are the ones which are making the strongest comeback. Typically, the high beta nature as well at play here, because remember, on days like yesterday, they fell as well, the hardest. About a 7% move coming in on Tata Steel. You've got SAIL holding up 6.5%. Hindalco seeing a move of about 4%. The entire pack is holding out very smartly. Nitin Raheja is well on the show with us. Nitin, hi, afternoon. Good to have you on the show. I just want to talk about metals here, Nitin, because days like yesterday and today are a harsh reminder that metals have that high beta nature and perhaps more a trading play here. But would you say that from an investment perspective as well, there are more gains to go for metals for the next 1 year? Or would you say the best of the move is already behind us, given the recovery from the March 2020 lows?
So, there are two kind of gains that typically happen when you see some of these stocks. One is the full re-rating that happens as far as the valuation is concerned. And then all the future sort of growth. So there is a combination of both these factors. So I think the first leg where these stocks were trading at rock bottom valuations and they got re-rated has probably happened now. And now onwards, it's really going to be a function of what kind of growth numbers are they going to show going ahead into the future as such. So, and if you really go by the fact the way the economy has rebounded, the way China has come back, the demand for metals. So I think they will now be a growth-oriented sort of story built in. But the re-rating has happened.
Nitin, curious as to where you stand when it comes to this entire consumption theme as well, because the sense that we're getting when we talk to some corporate voices, for instance, we spoke with Ajay Bijli of PVR, fairly confident in the view that, eventually things will return to normalcy, crowds will start flocking the multiplexes. We also spoke with the management of Indian hotels who believes that, staycations, leisure demand is all very much evident. Would you be betting on this play, or sort of do you believe that it's something that you'd avoid until we see some sort of a meaningful recovery?
So what kind of investor you are? I mean, clearly, if you look at it, the consumption demand in India is huge. You're going to be one of the fastest growing economies next year. Also you're going to be our savings growths are immense. There is this whole diaspora which has aspirational value, which wants to upgrade its lifestyle and so on and so forth. So clearly, consumption is going to be a big story. Now, if you're investing for the next couple of months, surely there is uncertainty because with the second COVID wave, one does not know what the government will. Although the government has resisted calls for lockdown, but if it continues at the rate at which it is showing. Will they do a limited lockdown, limited to maybe retail front-facing sort of businesses, which have a lot of density? So if you're taking a view for the next few months, surely these stocks will remain under pressure. But if you're taking a view, let's say for the next 3-4 years, clearly consumption is a big story, and India has been a consumption-led economy. Only in the last 1 year or 6 months, because consumption, and by the way, consumption has come back strongly, but because it has yet been a little subdued, it's essentially been investment which has driven growth over the last last 6-8 months. But long term, clearly, that is the play, in India, consumption.
Okay, fair enough. That's the view coming in. Just checking in on the markets then, and barring all of 3 stocks, everything's holding out quite comfortably in the green, fueling the move on the index. So Tata Steel taking a leadership position, M&M Finance looks strong, HDFC as well as HUL Titan, Sun Pharma, Adani Ports and L&T are holding out quite comfortably in the green. Nitin, we had two debuts today, Kalyan Jewellers, and it was quite abysmal, at a discount to the issue price, and as well as Suryodaya Small Finance, it debuted at 4% below the issue price. Any of the recent listings or any one in specific that you believe merit a mention? Is there anything that you're looking forward to as well with the likes of Nazara, etc., that is likely to create quite a furor on D Street?
I mean, if you really see a lot of the IPOs that have done, they've given quite a bit of, handsome returns. Now, Kalyan Jewellers, of course, is a very well-run company. However, not surprised by its listless debut. And, mind you, when you have a listless debut, it sort of also creates a lot of, there is a lot of negative sort of perception that builds up. But, it's a very well-run business. But by and large, if you see this whole sector, which is the whole jewelry sector, it doesn't get valuations, nor is it a very, very fancied sector. You've seen how Tribhuvandas gets valued and so on and so forth, others as such. So except for a Titan, which enjoys the perception because of management quality and as such, the rest of the jewelers really don't, have that same sort of perception or management perception in the market, and hence don't trade at this. As far as the small finance bank is concerned, if you really seen, small finance banks have had concerns more with regard to if they have a microfinance book with them. And microfinance companies, even including the largest one like Bandhan, has been under pressure, more so because of the elections in Assam and West Bengal and so on and so forth. But overall, whether you see even Ujjivan Small Finance Bank, it sort of yet trades, almost close to or below its issue price. So this whole sector, again, is people are waiting to see how these banks transition and show the long-term growth path as such. And so I'm sure at one stage they will get there. But right now, if you see, typically they don't get more than 2 times, or in fact slightly less than even 2 times book, and so on and so forth. So in that sense, Suryodaya is something one should watch for. I don't really know a lot about their business. I haven't looked at it, honestly, but I think by and large, the overall sector does not get that kind of valuation.
Fair point. Just looking at the texture of the market, even though we've eased off just a tad bit from the top of the day, but still the story really remains the entire metals pack. Jindal Steel as well, by the way, spurring up nicely, about almost 6% odd. And there's M&M Finance, there's Bajaj Auto, Idea, Berger Paints. They're all looking good, along with Concor, which is scaling up by about 6% on the futures. Kunal, Paints has been seeing a sporadic up move. Even earlier this week, you had Asian Berger both hold out. Is there a trade here? Anything that you spot in particular on the charts?
So, Aisha, there are 2 important points which have turned across for Paints. One of them is crude coming back towards the sub 60 levels and just thereabouts. So from being at 64 in plus kind of levels, it's trying to show signs of a persistent correction. So which I believe probably over the next couple of weeks that crude could stabilize on this 52 to 57 kind of range, 55 being a pivot point for crude. So I think that could probably play a bit of a positive for paints companies. The other portion, for specifically the paint stocks and looking at the charts, for example, for Asian Paints, I think after almost 1.5 months from January end, when Asian Paints particularly corrected and fell below the 2,700 mark, from there, from the first time after 1.5 odd months, the stock is coming back above its 50-day moving average. Some technical indicators like MACD and ADX are showing positive breakout. So these could be good signs which you've seen for the stock building up in the last few days. Volumes are a bit, I would say, flip-flop for Asian Paints because, on a day like today, for example, when the stock is actually confirming a breakout, you see the volumes to be almost, at par with the last 2 days of volumes. It's not as high as you would probably have anticipated for a breakout. So volumes are the missing link for the stock, which is why it's going to be a bit of a slow and a steady up move for stock like Asian Paints. But the breakout of this 50-day moving average and the indicator patterns are quite robust. So if I have to initiate a trade, I would look at Asian Paints, as a buy. Probably volume confirms the move, say by tomorrow, by Tuesday or by early half of next week. Then probably the move could get more stronger. But I think at current levels of 2,500 approximately, at least 100 to 125 point on the upside could be something to look at from a trading perspective.
Kunal, Nitin, both of you stay with us. Lots more to talk about. The rebound continues, but still we've got 1 hour to go. And remember, next week is a truncated one. So let's analyze how next week as well is going to pan out. But for now, we're going to take a very quick break.
And let's get in a take on the charts then. What direction do you see some of these metal stocks like SAIL, Tata Steel, as well as NMDC headed?
So, Aman, I think this is a big breakout for many of these metal stocks, particularly if we look at stocks like SAIL. I think start of 2021, the stock was at these levels of 75, 77, 80 kind of zone. There was some negative news flow which came across for SAIL. In a matter of 1 week odd, the stock had corrected sharply and come back to almost 60, 65 territory. So if a stock can absorb that kind of a 25, 30% correction and still make a comeback in just a matter of 1 or 2 months, that says quite a lot of character about that kind of a stock price. So I think in that aspect, SAIL coming back towards that 77, 80 zone during that breakout, I think is a very strong indication that there is a lot of resilience and extremely high demand for the stock price at lower levels, and that generally indicates very well that the stock could probably even break past about that 80 hurdle. So I think SAIL should be nearing a very strong kind of a breakout. Tata Steel, one of the stock which I had given in the morning trade as well, even that stock is looking extremely buoyant. So if you look at it on a relative basis in the last 1 month of the March expiry, when many of these sectors started to correct, Tata Steel was one of the few stocks which remained more sideways. The stock went into a 10% band. Now remember that metals are very, very high beta, natured stocks and sectors. So if there is any whiff of a correction in the market, they are the first ones to try and crumble under pressure. But this time you saw a completely different move for many of these metal stocks, and I think that's the hallmark for the sector so far. So the fact that the stocks are not testing their or breaking their support levels, even after consistently testing it, and on any periodical move on the rally on the index, you see these stocks breaking past about their resistances. This is a very strong indication that there is a stronger move for metal names. Tata Steel, for one, I believe, should be heading towards at least the 845, 850 zone over the next maybe a couple of months. And for SAIL, I believe that the positional target should be kept in the range of 88 to 93.
Okay, that's the take coming in on metals once again. Interglobe Aviation, UPL, Emphasis, Power Grid, and Lupin are your losers today. You could add to that an ITC as well, which has sort of underperformed. In fact, it started off the day in the green. Since then, has seen quite a bit of cool off coming in. Niche consumption plays, your hospitality, aviation, that's getting a little hard hit rather, because of fresh COVID cases across some of the Indian states. So Interglobe Aviation is down 2.5% right now, and PVR as well has been consistently falling. Nitin, needless to say that there are going to be many stumbling blocks, be it for hospitality, aviation, or for that matter, multiplexes to recover back to their pre-COVID levels. Because just when you thought things were easing off, again, you've got a spanner in the works because of the spike in fresh cases.
No, absolutely. And I think, you will keep getting, at least till the time COVID is behind us, all stocks which involve, density of population converging at a particular place could come under pressure from time to time based on this. But besides the point, even so when we talk about some of these plays, so if you take aviation, even at the best of time, aviation business does not enjoy great economics. It's been a more of a trading play rather than an investment play. So we've never sort of believed in looking at that sector. Even the hospitality, if you were to take, this thing. Because of the sheer capital intensity of that sector, it has never given enough adequate shareholder returns over the years. So that's been another sector which has not, we've sort of kept aside. Multiplexes is, however, a different game. It's a sector which I believe continues to enjoy a lot of potential, however, will be under pressure in the short term because if you take a country like India, you have very, very minimal options as far as entertainment is concerned. So in that sense, it's a sector which will always be in demand as such. But I think, if you're asking me for the next 3 months, I would probably think that that's not somewhere. But if you do get deep corrections and you're ready to look for the next few years, then surely. But I think it's too early to get into them right now.
Point. Kunal, would you be brave at all and venture into any of these names, be it in IHCL, Lemon Tree, Chalet Hotels, Interglobe Aviation, PVR, or in Inox?
Look into it, Aisha. I think specifically PVR, as a stock, whether it's in terms of fundamentals or whether it's in terms of what the stock has, shown in the last, few years, except for 2020, of course, and the start of 2021, I think erstwhile the stock had done exceptionally well, and it's now available, I think, at 45-50% of discount from its all-time high level. So I think that's a more reasonable entry point, towards the stock price. Even something like Indian Hotels, I think, I remember, I think, a month or two back, the stock had come back to 140, 150 kind of zone. It was very, very close towards breaking past above its major resistances, but then came selling pressure. So I for one believe that many of these stocks, Interglobe Aviation specifically, PVR, and Indian Hotels, I think these are the ones which I would be particularly eyeing even at current levels. I think a more of a staggered buy on dips should be a way to look at these stocks, because I for one believe that once the dust settles around the pandemic and the impact of that, I think these stocks would probably make a strong and natural comeback, like what we've seen for so many of these other sectors in the last 1 year. So yes, the recovery may be a bit slow or maybe a bit late for these stocks, but I think if for someone who has a lot of patience and wants and rather these stocks are available at a 45-50% discount from their major high levels, I think that should be a very good entry point, specifically for someone who has a longer term time frame. So I would be looking at a few of these names, and I think a buy and dips approach is a much better approach for these stocks.
Nitin, what's the outlook when it comes to the entire energy basket? Would you be placing your bets, eyes closed, sort of long term for Reliance Industries? What's the outlook when it comes to ONGC, as well as throwing in some of the OMCs into the mix?
So, as far as the whole energy basket is concerned, what we typically like in that is, as you mentioned, from a longer term perspective, Reliance looks good, primarily because it is looking to unlock value. It's among its three main business segments, and that's where we think there is an upside that will be available. We don't like any of the government OMCs because, again, as I said, they're not the kind of businesses which have been able to create sustainable long-term wealth for investors. They are, cyclical plays, and that's not the philosophy on which we work as such. What we like within the energy basket segment is more specifically the gas, and especially the city gas distribution segment. We think these are great franchisees. They've hitherto been monopolistic, but even after the opening up of the sector, I think the sector will retain quasi-monopolistic parameters. So, whether it is a IGL or whether it is a Gujarat Gas, I think they're extremely well-run companies. Gas is something which, India is focusing as a clean fuel to increase its weightage as a share of the overall energy basket. And, all these companies will, we think that these companies' valuations are yet within reasonable parameters, and there is a substantial upside to be made by investing in some of these companies.